live now. Hi everyone, and I welcome you all to the show. This is the Crypto Singh Show, and my name is Gunpreet Singh, and we talk about Bitcoin, crypto, everything that's happening in the crypto market, everything that's not happening in the crypto market. And today we have a very, very special guest with us. Her name is Marianne, and she's been an award-winning strategist. She has worked with Bank of America, Merrill Lynch, and she also has held portfolio manager role at Zoeng Iftar in New York. And she's one of the most renowned people. You could look up to her interviews on CNN, CNBC, Bloomberg, and she's been named in so many articles. So she's a name that is pretty much known on the Wall Street, worked for good 35 years. I mean, almost 35 years is like, your lifetime on Wall Street. She's been a superb technical analyst, and I'm honored to have her on my show, and I welcome her to my show. And I thank her for coming and spending and taking this time out. Marianne, I thank you a lot to come on to the show, and it's great to have you on the show.
Oh, it's a pleasure, and I'm really honored to be here with you today.
So let's talk about crypto. Let's talk about your journey. Tell us more about yourself, how you got into it. I mean, I would call you a Wall Street wolf. And getting into crypto, I mean, how did this change come about, or since when have you been in crypto? Take us through your journey.
Well, while I was on Wall Street, I was paying attention to Bitcoin. We really weren't allowed to do any research on it or really talk much about it. But I really had a sense that the world was going to move to an electronic form of payment. And Bitcoin, to me, appeared to be an important barometer of that direction. But what I really need to tell your followers is that I'm not a financial advisor. I never was. So this is not financial advice. This is really just personal opinion. And if you need financial advice, please seek out a licensed financial advisor. But as I was watching Bitcoin, I saw the volatility. I didn't get involved. I didn't think it was appropriate at the time. And it really took me to retire to have the time and the flexibility to really take a look at the world of crypto. And I really started in earnest through London Real's academy, which is called the DeFi Academy, and learning it because I needed to learn. I realized that it was complex, that it was a new language, and I needed to learn it somehow. And I really trusted Brian Rose because he's a former Wall Street trader. So I felt that we would have some kind of Wall Street bond, and I thought he would teach it in a way that I would understand it. So that really started my journey, and that was last October. And I really did come to believe that DeFi is the next evolution of technology. We've been disrupting technology. And the example that I give is retail, because most people can understand retail. We used to always have to go into a store and shop. Now think about how many things you can now actually purchase online. And during COVID, when we had lockdowns here in the US, I did even my food shopping online. And we kind of had that before, but I never took the time to do it. You can buy almost anything online. So you'll find businesses in retail, if they don't have a good online option, many of them are struggling. So it'd be foolish to think that the world of finance will not be disrupted. And you're already seeing that. I don't even have to go to the bank most of the time. I can deposit a check on my phone. So when I really started to realize this disruption and I needed to learn it, that's what I did. That's how we met, through the London Real DeFi Academy.
I call him the GOAT, greatest of all times. Brian Rose is a great guy.
He really is. And I think the greatest thing that he's done for all of us is to bring all of us together. We need a community. We need a community to support one another. And there's a lot of information. There's a lot to the world of DeFi. As you know, there's crypto, there's NFTs, there's the metaverse. No one could be one expert in one area. And even, when I worked on Wall Street, I had a team of people. I couldn't do everything myself. You really need a team, a community that can help educate and support this new evolution in the world of technology, which is called Web 3.0.
Because personally, I think DeFi is, for me, it's revolutionary. And it's just something that is legendary and that will change the parameters of the world, how the businesses are done, or how the banks, you work with the banks, you would know probably more about DeFi. I mean, what is your take on DeFi? What do you think? Because I personally think it's revolutionary. Banks would have to change their systems of working. What is your take on DeFi?
DeFi is, I would agree with you. It is revolutionary. I think in many cases it's misunderstood because especially in the world of crypto, everything is called a cryptocurrency. And everyone thinks it's a currency, like whether it's a dollar, a lira, a pound, a Swiss franc. And it's not. There's forms of technology that use tokens and that they do call them currency, but they're not currency in the same kind of fiat context that we're familiar with. So the banks, if they don't move down the path, I'm going to say the path of blockchain, right? This is all blockchain technology. And I'll give you an example. Even today, if I go out, and this is in the United States, if I purchase or sell a stock, I have to wait 2 days to get that payment in my account. In the world of crypto, any exchange is done in seconds. If you want to wire money outside of the United States, it can take days. In fact, many people joke that if you want to give money to somebody in London, it'd be faster to hop on a plane and deliver it in person than actually trying to do a wire transfer.
Absolutely.
Right? So these are the things that the banks are going to have to deal with. They have to be able to do things in real time. Now, even the speed of where we are on the blockchain is probably not where it needs to be. But that's going to come in time. So I think the banks over time will be doing this, especially for settlement for T0. I think they're definitely looking at trying to do T0. And I'm sure they will look into the form of being able to transfer funds instantaneously. And if they're not, I think that's foolish. We're moving in that direction.
And a lot of banks, they take a lot of documentation before transferring the funds. So there's so much of work that has to be done even before transferring and putting, maybe, sending goods for export and the money that is remitted in. There's so much of documentation that still is required with the banking. So I think that is...
And that's because they're regulated. And They're required by regulation because of fraud. They really came down on banks for fraud. And they have definitely instituted what I call a lot of barriers to be able to freely move money because of this. But there are ways to do things on the blockchain that can actually free us up, where you can actually monitor and be able to determine whether or not transactions look fraudulent or not. And that would lessen the weight of all the paperwork. But it's going to be interesting because governments are definitely looking at regulating crypto. And I really hope that they take the right path and don't institute the same roadblock of all this trail of paperwork that really bogs the system down. There are things that can be done where you don't need all that paperwork.
Because I think it's going to be very interesting because blockchain is inevitable right now. There's no way that you can do without it. And it's already started. But now the problem is that how to regulate and which countries would do it and how they would do it. So that still remains probably a big question. But somewhere down the line, I think it's inevitable. It's a matter of time. but something has to come in.
I would definitely agree with that. And the other thing I think that is slowing part of the process down is you become the banker when you enter the world of crypto. You're in charge of your assets.
Right.
And you and I learned how to do that. And it can be very unsettling being responsible and knowing that if you lose your password, you lose your assets, for example.
Yep.
Right? Or if you lose your key that has your password that's connected to the blockchain.
Right.
So it's a whole new world. But I find the younger generation, they're not as afraid. The generations that are older, we're so programmed in the old system that we're afraid to venture out into the new system. But there are things that you can do, precautionary measures that you can take to try to ensure some of the safety of your assets. But nothing is ever 100% safe. And this is the most volatile asset class I've ever seen. And we recently, and I'm sure we might talk about it, we recently had extreme volatility and we I think kind of lost maybe a cryptocurrency that was the third largest. And I want your viewers to know that with every new technology like the internet, we've lost companies, but it didn't stop the growth of the technology. Other companies come along, new technology evolves. It's an ever evolving process. So if you're going into the world of crypto, diversification is very, very important. There's a saying here in the United States, don't hold all your eggs in one basket. You know, you don't want all of them to break if the basket drops. You really need to have everything kind of spread out. So if something goes wrong, it doesn't destroy everything that's in your portfolio.
Oh, absolutely. Because I mean, we will be coming to those questions, and I do agree with what's happened with the market. We'll talk about that, about the Terra Luna and how the governments are taking the stable coins now, because I see UK coming out with a regulation for the stable coins. I mean, we'll take your viewpoint on that. And so just to add on to what you said, look, when there was a .com boom, there were so many companies that were lost. Right now, we have 18,000 plus cryptos. So certain bit of junk will have to be washed out before this going to the mainstream. And that eventually happens with all the markets in the world. Any stock market has always crashed, and then the regulation comes in. And then that's how it structures into a way where people want to, governments come in to protect people's money. So I think that part and parcel, because it's too young, I personally feel. It's like a small baby right now, the crypto markets. And as soon as the more it matures, the less volatility it would be. And all of these things would get washed out. So that is where I always feel that Bitcoin, Ethereum will always lead the thing, because the alts would come and go. But yes, we'll talk on all these things. So what's your viewpoint on what has actually happened with Terra Luna, or what is your current market analysis or situation that you think is going to happen with the market?
So we're in a bear market, and a bear market means you either trade down or you trade sideways for a long period of time. And every market cycle has a bull, and every market cycle has a bear.
Right.
And right now we're in the bear phase. And I've always equated bull and bear to fear and greed. Right. So when we're very, very greedy, we're in a bull cycle. And when we're very, very fearful, we tend to be in a bear market. So I do see more downside in the crypto space, and I see more downside in the equity markets. And from a fundamental basis, the way I perceive it is, at least here in the United States, and there are other governments that lowered rates significantly and printed a lot of money. So there was a lot of liquidity. When you have a lot of liquidity, risk assets go up. Yep. And what's happening, in fact, one of the sayings we have in the United States is when the Fed takes the punch bowl away, meaning they start raising rates and they start taking liquidity out of the system, we go into a bear market. The party's over. The party's done for this cycle. And then you wash it out, you reset it, and you will eventually start a whole new bull cycle. But it's a process. And so I see more downside for risk assets, period, because we're in a rising interest rate environment. That may be sustained longer than we want because of the inflationary aspects that are occurring here in the United States and around the world. My sense is we'll probably get to a bottom in markets somewhere in the fourth quarter.
Right.
I think we'll get a washout, and then we'll have to start a whole rebuilding process. And why do I pick like the fourth quarter? Because there's seasonality to markets. And I'm going to follow the seasonality of the equity markets now that crypto is linked to the equity markets. And the seasonality tends to be that we don't make market bottoms until somewhere around September and October. The best markets in terms of returns are November, December, and January, historically. The other thing is we're in what's called a midterm election cycle.
Yep.
And that cycle also calls for a very rocky year. And here's another one. There's also cycles that are called the decennial pattern, where we look at the years and the number that they end in. You know, there's 0, 1, 2, 3, all the way to 9. Well, guess what? 2's not a great year. So there's a lot of things that are actually around seasonally and historical patterns that suggest that we still have more downside on top of the fundamentals saying that we have downside. So when you combine the two, it's a very, very powerful message. But the greatest message of all is everybody that's been waiting for crypto to go down, it's going down. And we're going to get great levels to really build out our portfolios.
Absolutely, because I think that there was a lot of money printed and there was like a party going on in the world. And once Fed started pulling that money back is when I think the market started going back down. And now, I mean, after this, but what is, I do agree that I also see downside for Bitcoin because I don't know how long do you see this as a bear market? And what do you see of this as a bear market? And what do you see of gold and silver?
So I see Bitcoin, I see all of crypto in a bear market. Everything's in a bear market. All risk assets are in a bear market. And I think crypto can follow the equity markets and make it a very important low. Somewhere, I'm looking for it somewhere around the fourth quarter. It could come sooner, but that's my anticipation. As for gold or silver, when you're in inflationary times, they do well. And if you actually look at the performance of gold, although it's not up a tremendous amount, it's up more than the equity markets.
Yeah,
equity markets are down.
It's outperformed Bitcoin for now.
What?
It has outperformed Bitcoin for now. Gold has.
It has, and I think part of it is because we're in this bear cycle. Interest rates are going up, and that's when, and we're in an inflationary period, and that's when gold actually tends to do well. Gold has always been used as an alternative asset and a diversifier in really bad times or in inflationary times. But it's generally not the asset that outperforms over a long period of time. That's why in traditional asset allocation models, gold is or alternatives are never a very, very large percentage of the portfolio.
Yep, because gold tries to jump and then comes back to its own seat. You know, gold tries to do that. And but I personally think because of the inflation being so high, and I think we are at the peak of inflation. I don't know if the prices would go on further. I mean, they would hike more, but I think we're already at the peak. And the gold prices should perform slightly better in next few months, like we could say midterm. Longer term, of course, I personally think Bitcoin would be the bigger thing to buy. But for the midterm, I think gold should be going up. What is your view on that?
I think in the near term, over the next maybe 3 to 6 months, gold should outperform Bitcoin. But over the long haul, I would anticipate Bitcoin to outperform gold.
Yeah, and what's your take on the inflation?
I don't think inflation has peaked yet. Okay. I think inflation numbers, and this in the United States. So in the United States, I still think we have a few more months. The numbers are too high. And some of the housing data, and housing has gone a little crazy here since COVID. Not all the housing data yet is in the numbers. So I'm not sure we've actually reached a peak. And here's the thing, numbers can get revised. We're not going to know where we are in the cycle for months. You're going to need several months of data, and you probably need a smooth on that data, some type of moving average, to really determine when we've actually reached a peak. So I would anticipate that inflation will stay a little bit hotter, a little bit longer. And I would anticipate that our economy here in the United States will most likely go into a recession next year.
So this was exactly my next question, that what is your take on the recession? Because I think Q3 should get into recession, and inflation data for UK has come around 9%. And what is your take on recession?
So I think a recession is inevitable, and it's driven by the Fed raising rates, taking liquidity out. It's a very traditional recession. We also have very high energy prices. It's very common when energy prices go up that we go into either a very tight restrictive growth where it feels like a recession, or an actual recession. So we kind of have everything built up where we can go into a recession. What a recession means here in the United States is that we need several quarters of GDP to go negative. And right. GDP gets revised all the time too. So many times, by the time we realize that we're in a recession, we're almost coming out of the recession. So yeah, so it tends to be very lagged. The equity market is actually a great predictor, because when the equity markets bottom, they're called discounting mechanisms. They generally predict the next 6 months out. So if we can really get a bottom in the equity markets and get the equity markets moving and stabilizing, it would be a good sign that a recession would be short-lived. But if we were to sustain a market that can't move, it might indicate that the recession would be longer. I don't think, recessions are very hard to predict. Economists have all the data and they get it wrong all the time. I mean, I think if they're like weather people, they have all the data, but the models don't always get it 100%. But I think people should prepare for definitely slower growth right. and could be very contractive growth, and be preparing for what do I want to do with my portfolio? Because I think you're going to get equities on sale. I think you're going to get crypto on sale.
Yep.
And that's the time. Right now is the time that you actually sit and try to figure out how you want to reposition your portfolio. What's your asset allocation that you want to achieve as things start settling down?
I think the GDP, I don't know about the data, but is it like minus 1.4% right now?
No, we're not really that negative.
Okay.
Well, I don't remember if our last print was negative, but we need 2 quarters down.
Right.
And so we don't have any data yet to suggest that we're in a recession.
Okay.
But I honestly don't remember the last print.
Right, because I think I totally agree with you that I think next year, I thought maybe Q3 we would start getting into recession the way things are looking. And some of the countries I think they've already started to, the economies have started slowing down already. So I don't see that, the recession would, once the recession sets in, I think crypto or all the other markets would get cheaper.
Yes. And a great barometer of that is there are several companies that release consumer spending data. And see, the consumer spending data here in the United States has not become that constrictive yet. Consumers are still spending. You really go into a recession when consumers start holding back. Now, consumer confidence is down, which is definitely not a good sign. But you really need the consumer to become constrictive to really cause that GDP to contract.
Right. And even with the prices going high, I think you're right that the spending is not getting down.
Not yet. And I can tell you, going out here in the United States, people are out. People are doing things. And I think that's because we were locked down for so long, for 2 years. They don't care that things cost more. They just want to be out.
Absolutely.
And they want to have experiences. They want to enjoy themselves, regardless of prices. But you can get to a point where they say, that's it. I'm not spending any more on that. Or they do what's called the substitution effect. Instead of buying a brand name, they'll buy an off-label.
Absolutely.
So we haven't really quite gotten there yet, but I wouldn't be surprised if we do.
And you, I mean, the whole purpose of Bitcoin is being decentralized, but we're still Bitcoin it works in correlation with the equity markets. And when you think
it used to not do that, it does now. I think part of that is there are many companies I know here in the United States that found ways to be able to purchase Bitcoin, like an Ethereum, for the retail client, so they don't have to do it for themselves. And we've seen more retail come in, and right. I think that's part of the process.
Yeah, and also I think it's what's your take on the tech stocks and Bitcoin? The way
the growth stocks.
Chart with us offhand.
Yeah, so what I call the big growth stocks with no PE, and PE stands for price earnings ratio. And there are many companies where their stocks were in the stratosphere, and the companies had either no earnings or very little earnings, so their PE was extraordinarily high. And those stocks are down 70, 80%. So they have the same volatility as Bitcoin.
Right.
Because Bitcoin, if you study the history of Bitcoin and its volatility, it is not uncommon in a bear market for Bitcoin to go down 80% and recover.
So that's what I want to understand. That, I mean, you shared a chart with us, which was Amazon, Netflix, and you call it the FANG.
Oh, the FANG stocks.
The FANG, you know. And how do you correlate your FANG with Bitcoin?
They're very similar. They're very, very similar. Again, very high. These are considered very high risk assets.
Right.
And again, when the Fed takes liquidity out of the system, when the Fed raises rates, high risk assets come down. So Bitcoin, FANG stocks are correlated in that basket. And until we get all of that washed out, you still have downside risk.
So, you know, I was reading that chart, and something that I saw in those charts was that there was a time where Bitcoin used to crash more than some of the tech stocks. Now, it's actually some of the tech stocks are getting crushed more than Bitcoin.
Correct. And that's because they went up hundreds and hundreds of percent.
Okay.
And again, you have to look at the price earnings ratio, especially if you have no earnings. Those stocks get pummeled, and we traditionally call those growth stocks because fund managers are paying up for future earnings. And I don't know what the correlation between Bitcoin and growth stocks will be in the future, because right now we're busting the bubble in these big high growth names. So I don't know if they're going to have a correlation effect in the future, but right now, there's definitely a correlated factor between the two of them. And it would be hard to predict who's going to go up more or down more, or up less or down less. The mere fact that they're correlated is the most important part. And that's what you want to pay attention to.
Right. And how is the growth of when Amazon started, or all these, because for the users, you know, who are investing right now into the crypto market, I just want them to know how is the tech stocks related initially, like the first 10 years of tech stock to first 10 years of Bitcoin?
You know, I never really took a look at that pattern.
Right.
I mean, I just happen to know Amazon's pattern. Amazon for the longest time did absolutely nothing and then broke out. I mean, it traded sideways for years and years and years. And then all of a sudden just took off. Apple's been all over the map. Apple's had a lot of controversy, but then finally started to get a bid after Warren Buffett took a position in it. So, and Netflix was just, a whole new technology in terms of consumer stock of consuming video content, TV content. So every company within FANG is a little slightly different. Some of them started off very slow. Some of them started off very fast. But the most important part of the crypto chart, for your listeners, is that you want to look at the long-term cycle. And if you look at the long-term cycle, Bitcoin has a chart that goes like this. It goes up. Even though it comes down 80%, it doesn't make a new long-term low. It holds that long-term trend line. As long as you hold that long-term trend line, you're in what's called a secular bull market, meaning that you'll have a bear market, but you'll recover and you'll go on to all-time new highs, that you're in a long-term uptrend. So if you look at a lot of the FANG stocks, they've been doing that for quite some time.
Absolutely.
And it's not necessarily all done and over with. It doesn't mean that they're not going to come back. But every company might be different. Every cycle is slightly different. The most important thing about Bitcoin, does it hold when it goes down? Does it hold the long-term trend? Bitcoin, I'm not saying it's going to go here, but Bitcoin can go to 17,500 and still be in an uptrend.
Absolutely.
And that's the most important part. None of us know where the low is going to be. Is it going to be, close to where it is now? Is it going to be 20,000? Will it be 18,000? Could it be 17,000, 17.5? I mean, it could go to 17, needs to recover very quickly. None of us really know, but my sense is because we're in a cycle of technology, meaning in the United States, when I look at the what I call mega trends of the economy, in the 1500s, we had an agricultural based society. The technology was a sundial. Then we created the steam engine and we created this whole industrial cycle. That started in the 1700s. So from 1500 to 1700, that was 200 years that you were all agriculturally based in technology. Then we went to the industrial period and we didn't come out of that until 2000 when we created the internet.
Right.
So I think technology has hundreds of years to develop. We are in the tech age, the tech revolution. I mean, in some ways, I'd love to come back in 100 years to see what's happened with technology, because it's even mind-blowing where we are today compared to where we were even when I first went to Wall Street in the 1980s. So that's why I'm also confident that blockchain will continue to evolve and develop, because it's Web 0.3. And then we will develop that. And then we're going to develop something else. And then we're going to develop something else. But technology is going to be ever, ever evolving.
Oh, absolutely. And where do you think that we stand right now in terms of internet growth? Where would the crypto market be if we compare it to the internet era?
Oh, and so, I mean, you're either in the, I'm not even sure we're in the 1990-2000 period. I don't even think this has been the true blow-off phase. I really don't. I'm not even sure that we've reached that level. So I would say right now we're probably maybe around 96, 97, 1996, 1997.
That's what I also had in mind, that I thought 96, 97, I was thinking about it, that should be the thing.
That would be my guesstimate.
Yeah. And one of the, and talking about a very interesting thing that when Warren Buffett bought stock in Apple, he says he won't buy Bitcoin at $25 also. What's your take on that?
Yeah, I respect Warren Buffett. Listen, the man has done an extraordinarily great job in building wealth. I mean, I cannot criticize him. But what I can do is observe. And my observation is he never liked technology. He only buys what he knows and what he understands. Technology was never his thing. Apple was the first tech name that he bought. I don't think Warren Buffett is representative of technology. In fact, when you look at Warren Buffett's portfolio, what he really is an expert in is finance. Berkshire Hathaway actually tracks like a financial stock. He has a lot of insurance companies. He has a lot of banks. He really is more of a financial biased portfolio than anything else. He's not a barometer of tech.
Because I also think that Warren Buffett, so I'll give credit to him as what he's done to the finance industry, but saying that, I think it's a lot of the crypto is a lot to do with the young generation or with the next generation. Because I mean, forget Warren Buffett. I think in our house, probably my parents won't understand Bitcoin for now. My grandparents won't understand. So I think it's just an era where they've been, they worked, 60, 70 years in an industry in a particular way. So it's very difficult for them now to adapt to certain changes.
I would agree with that. The only reason why I saw crypto, because I'm not really considered young, and why I've adapted, I was very blessed. I was very early in my career, I was a junior technology analyst. So this is around 1990. Wait, I got to think about this. Wow, 1987. So in 1987, and that was my first financial crisis, was the crash of 87. So in 1987, I became a junior technology analyst. I worked with an analyst that followed companies like Apple. There was a company called Compaq Computer, which is now part of Hewlett Packard. So basically PC generated companies, Dell. So we followed them. I was only out of undergraduate school. I didn't study technology. I'm about as green could be in 1987. And I told him, I said, I don't know anything. He says, you don't need to learn. So he started putting trade journals on my desk. He said, start reading. There was no dictionary of technology terms. So I would write words down, and at the end of the day, he would give me definitions. It took me 6 months to be able to read those journals and actually understand them. It was a whole new language. I had to learn all new technology. I learned all new software. And to me, this is what I'm reliving. I feel like I'm that analyst back in 1987 that knew nothing, whose head was exploding trying to learn these terms. But thank God there's dictionaries in the internet that can actually explain some of these terms now. Back when I started, there weren't. And that's another reason why I'm so dedicated to learning the space, because in my heart, I know this is the direction we're going in. This is the direction I need to go in, because this is the way the world is shifting. And I want to be able to do it with my children, right? Because this is going to be their world. And so I want to be a part of that.
So I was asking you the same thing, that it's almost like you're reliving the entire thing now, because it's a new technology, new learning, new curve, new markets again.
Yes. And I even said to myself, Marianne, do you really want to do this? Because it's hard. It's hard. It doesn't come as easy as it used to. But I just believe in it so much. And I want to help other people understand it. Because most people that I know don't understand it. I'm even amazed how many relatively young people, they know it, but they really don't understand it. And I would love to be able to be an educator and a teacher in the crypto space, because businesses will need to adapt to this whole new world. That they're at some point going to have to be able to accept crypto as a form of payment. And we're starting to see that already. We're starting to see even credit card companies, Visa, go into the world of crypto. You already have it on PayPal. You can exchange with crypto. You don't even need something like a wallet called MetaMask. This is the way the world is, as you said, this is the way the world is moving. And you're either on the train or you're off the train. And I made a decision that I'm not off the train. I'm on the train.
Oh, absolutely. And talking about the revolution or the way things are changing, what is your, someone has asked this question, that what is your take, which is the most important thing, on US dollar and Bitcoin? And do you think that
everyone talks about US dollar going down to zero or, getting crushed and the Bitcoin but I think it's very far-fetched. I don't see it. It's not something that, the entire world runs on US economy for now, the US dollar. So what is your take on that?
I think fiat's going to be around a lot longer than some people want fiat around. Let's put it that way. Evolution takes time, especially because we've built economies around the world on fiat. That's not going to change overnight. And you don't want the US to implode overnight because that would have very large negative ramifications. So this is going to be a slow process. What's happening with the US dollar right now as we talk is if you look at interest rates, and let's use 10-year government bond yields. If you look at the US yield relative to the developed governments outside of the United States, we have an extraordinarily high interest rate, and we're raising rates. So part of how you price fiat is through what we call interest rate spreads or interest rate differentials. And so the dollar has been getting stronger because the US is raising rates and has rates significantly higher than outside of the United States. As long as we have much higher rates and the world believes that the US can pay its debt because treasuries are debt, right? The government is lending money. As long as there's full faith and confidence in the purchasing of that debt, fiat is fine. Yes, we have a very large deficit. That even concerns me. How do we eventually deal with that? In emerging markets, how you deal with it is you massively depreciate the currency. You'll depreciate the currency by 50%, create a recession and have massive inflation. It'll take at least a decade to work off, but then the country's completely reset. There's a lot of pain in that process. It would be very painful for the US and the world if we just slashed our currency in half. It would just have such huge negative ramifications. So I think this whole shift to Bitcoin or whatever we're going to use as, let's call it eCash, right? Because that's the one thing that was missing from the internet is eCash. The other thing is the blockchain that Bitcoin is on is not efficient. You can't do a lot of transactions very quickly. It's very cumbersome. It's very slow. We don't have a system developed where we can mass shift everyone to, let's say, a Bitcoin platform. We need to better evolve the technology and get it much faster and much more efficient before you're going to see mass adoption. And, as we discussed, there's probably going to be some form of regulation that also enters the system.
So talking about mass adoption, what is your take on the adoption for now? What's happening? Are the US companies getting into it? I mean, there are certain companies who are already investing into it, but as a company as a whole, or the other bigger companies getting into it, or what's happening? Because right now, what's happening is most of the whales are holding the maximum of the Bitcoins. It's like few people have, and the retail has very less Bitcoin. There are probably few whales who actually hold the maximum number of Bitcoins.
It's going to take time. I know companies are looking at it. Certainly the banks are looking at it for sure, trying to develop a strategy. Governments are looking at it. Governments are looking at issuing their own coins. So we don't have even close to we have negligible adoption at the corporate level. You see select companies. Tesla's probably the most publicly known and loudest in the world of crypto. This is going to be a process, and it's going to take time. And for the younger generation, for them, it's probably not going to be fast enough. For the older generation, it's probably going to be too fast of a change, right? But to be honest, we all know the system. You and I have been on the system. The system is slow. The system is expensive. We need better efficiency, faster, cheaper platforms. And we'll get there. And as you see that evolve, as you see more and more retail enter, companies will start having more and more of a crypto option on their platform. But think about this as, even how long it took for retail to even adopt online retail. I've been talking about this for years. I would say even 7, 8 years ago, only 3% of retail was online. At least 7 or 8 years ago, retail only represented, online retail was only 3% of businesses. Much larger.
I want to add on to this. Actually, I was amazed by the amount of retail sales that happened online after COVID. In fact, a lot of the online adoption came after COVID. That's the funny part of it. I mean, 20 years put aside and 3 years put aside.
Yeah.
3 years
so
adoption.
People were forced to do it. You needed an event to happen, and then it becomes habit.
It becomes habit. Yeah.
Then it becomes habit. We're nowhere near that yet. Nowhere near. And I don't think we're anywhere near fiat going away. Now, what's interesting is China is already 100% electronic. You can be in China and you don't have any physical currency. It's all electronic payment back and forth. Right. I believe even in Sweden, because they were one of the first ones to adopt non-cash payment. It took us a little bit longer in the United States because of all the fees on the credit cards. There's been a lot of friction there. But I think even in Sweden, everything is all mostly electronic, not a lot of paperwork. So I think that's part of the process. Is we've got to get used to doing more, not having cash in our pocket, not having coins in our pocket is one of the first steps that we're going to have to work on before we even go fully electronic.
No, I totally agree. And I mean, your take on certain countries like Dubai is trying to manage a lot of the crypto markets, and so is Singapore. And they all are taking, crypto markets very seriously, because I think Dubai is one place where I think the entire crypto world is shifting to. So
yes, because they have, I guess, the environment that they're creating for companies is very favorable. So you're seeing the crypto space shift there. You're absolutely correct.
And, countries like, I didn't follow that up, but El Salvador, they had a meeting with certain people for the adoption of cryptocurrencies. So I don't know what happened in that meeting. I didn't follow it up after that, but it pretty much looks like so small countries would love to get into crypto markets because the currencies aren't that strong. So they would love to get into the crypto markets.
Yeah, and in a lot of the emerging markets, the people there don't have access to banking. And that's where where crypto, if you have a phone, right? All you need is a phone and you have a bank with crypto. So we're seeing actually much faster adoption in the emerging markets than we are seeing in developed markets because of that.
And what do you think about the companies taking on the metaverse or NFTs?
Well, that's a whole new other world. There's pluses and minuses. There are things that I like about it, and there's things that I don't like about it. But we're definitely moving towards a world of the metaverse, which is basically replicating everything we know in the real world online. That's the simplest way I can explain it. And I know that sounds bizarre. It's not just about gaming, we're going to replicate we'll be able to have meetings like you and I will be able to do this and feel like we're physically in the same room. NFTs, which are non-fungible tokens. If you create this world, well, you're going to need desks. You're going to need artwork. You're going to need clothing and jewelry and shoes. So you're going to need NFTs for all of those. So it's really mind-blowing. When I start going into this, what it reminds me of is Star Trek and the hologram, or the holodeck, right? Everything is there. You go in, you walk in, that's the metaverse. The metaverse, or think anything Star Trek, even with the first Star Trek, they had flip phones. If you look at Star Trek The Next Generation, all their consoles look like iPads. So one of the things you can do is just watch all of Star Trek and the technology that's coming. And all the doctors had scanners, right? They just had a thing and scanned your body. I'm sure that's coming too. That we don't have to go into a machine. They'll just have a handheld thing and we'll all be scanned medically.
Yeah, and I think anything that you could do in real world is all going to be there in metaverse, the meetings, and tell us what you don't like about metaverse.
What I'm concerned about metaverse is whether it's kids or individuals living with a headset on their head and not living in the real world, living just in the metaverse.
I think it's going to be an individualistic lifestyle going ahead, because I think from gaming, they'll get used to certain things. I mean, once they get used to certain things, I think it's going to be very difficult to get that. You know what you're saying. I know what I totally.
Yeah, I'm an outdoor person. I like my outdoors. Yeah. I like my fresh air. I like my grass. I like my flowers. Real.
No, I agree. I totally agree.
And you're right. Gaming is huge, and gaming is continuing to grow. And we're going to see a lot more new gaming companies come out.
Gaming is going to be massive. Gaming is again, and what will also happen is that you're earning. So I mean, Web3 is where everyone earns. And everyone will be earning, and everyone will be, so even the kids, they'll get on the gaming, and they'll, your education. I think as a human lifestyle would take, it's gonna be a huge difference in what you are seeing today and what we're going to be seeing tomorrow. And this generation technological shift, I mean, if it took probably internet to come in 10, 15 years, this would take 5-7 years. So even the adaptation span gets shorter because it's technology, and that's how things would change. So I think next generation that you see within, 10 years or 15 years, it would be a very different kind of a generation.
I would definitely agree with that.
Because I think that, and gaming, of course, gaming NFTs, I think are going to be the biggest NFTs and the biggest things to do.
And I think the other thing is sports. You're going to see a lot in sports, a lot in merchandising. I think sports will be also very big in NFTs.
Absolutely. I think so. NFTs in general, I think, is something that a lot of businesses would be set up in metaverse, NFTs. I think it's inevitable, but it's still, there is so many of the NFTs and metaverse. Which one survives will be a question that would always remain. And I personally think that in a bear market, it would always be advisable for anyone investing. We're not financial advisors, but to always get into blue chips, because you might get them cheaper in the bear market. And the bull market, because there's certain certainty with those projects that they rely on, that in the bull market, people would get bullish on them.
Yeah, I'm not even sure we even know what all the blue chips are in the NFT space yet.
Well, so you're a DeFi person.
Yes, and I have NFTs. I do. I have some. I'm diversified.
Right. So are you a Bitcoin maximalist, Ethereum maximalist, or? And so your diversification,
I have everything.
What would your portfolio look like? What percentage would you allocate in this market to stablecoin, to anything?
So here's the thing something that I learned on Wall Street. And again, I'm not a financial advisor. This is not financial advice. Every time I would get a question, what's the most appropriate asset allocation? I always gave the answer they never wanted to hear. I don't know, because every individual has different goals that they want to achieve, different risk tolerances. Some people can take a lot of volatility and not freak out. Some people can't take a lot of volatility. But what I found, when you really sat down with a financial advisor and really scoped out what was an appropriate long-term asset allocation, meaning how do I grow my assets over the 5, 10, 15, 20, 30, 40, 50 years? When you went through a bear market, they were more comfortable because they knew why they were allocated in the first place. And if they sensed that a bear market was coming, sometimes they would make adjustments. Or as your portfolio is growing and your assets are growing, sometimes you need to take some profits and then hold on a little bit. And the term that we use on Wall Street is have a little bit of dry powder for the bear market. So to be able to take advantage of prices that are weaker. But there is no right or wrong answer to asset allocation. It's a very individualized process. On Wall Street, if you took what we call a neutral portfolio, if you didn't want to have cash, it would be 60-40, 60 stocks, 40 bonds. Now, with interest rates so low, most investors didn't want to have 40% of their portfolio in bonds because they felt that was too risky in a low interest rate environment. And in many cases, that was very, very true. So you really have to look at what are the assets, and you have to, do I want to have gold? Do I want to have silver? What do I want to have in Bitcoin? Do I want to have hedge funds? Do I want to have private equity? All of those come under alternative assets, all of them. So is it appropriate to have all of them? Which are the ones that you want to have? So that you really, this is, doing your own portfolio, it can be very challenging, which is why it's always good to have a financial advisor guide you. I am finding that most of the big firms can't talk about Bitcoin or crypto and don't feel that they can make recommendations. They just tell their advisors to tell clients not to invest in it. It's too volatile. And that's not necessarily the right answer for everybody either. So you need to really find somebody that's really open-minded and really able to take a very broad view of asset allocation. It's a very complex. We still study it today. There is a debate on whether or not bonds should even be in a portfolio. My whole entire career, bonds were always supposed to be in a portfolio. But with interest rates at zero, everybody started arguing, well, bonds shouldn't be part of the portfolio. And that debate is still ongoing.
I mean, I agree with that. I mean, if the interest rates are zero, what's the point of the bonds? I mean, what exactly are you doing with it?
So it does lower volatility when you have a bear market in stocks, most of the time. In this particular case, not working. But yes. But let me tell you, up until this year, bonds actually diversified a portfolio. This is one of the first years that we're really struggling with all asset classes and not finding a lot of asset classes diversifying other than, let's say, gold, some hedge funds, maybe some private equity are actually diversifying portfolio. And the average person doesn't have hedge funds or private equity in their portfolio. They can have gold. But gold doesn't earn anything. And that's why a lot of people don't want to own it.
Yep. Yeah, but gold, I mean, has been outperforming pretty well. Gold has been performing.
Gold, the only time I ever saw gold not protect a portfolio was during the financial crisis.
Yeah.
The metal and mining stocks normally diversify, but hedge funds own everything. So everything got whacked. But that was, when I studied the history of markets, almost 100% of the time, gold or gold stocks always diversified a portfolio. And they're doing that now too.
Because
so it's not just gold. You can look at gold stocks.
No, absolutely.
Or metal stocks.
I still believe that gold is something that, I would have it in my portfolio because gold
is in my portfolio. It's in my crypto portfolio and it's in my regular portfolio. Just FYI.
So, I mean, there you go.
I have it in both.
Yeah. So it makes sense. I think gold is something that I think is not going to go anywhere, because what is your take on, say, Bitcoin 2.0 versus gold? Because a lot of people take this debate forward that this is the new gold. But it's like,
I would not call it gold. I would call it an asset, but I would not call it gold.
Absolutely, because I also think that so nothing happens overnight. So everyone, I mean, this Bitcoin comes in and people start comparing it that this is gold. Gold has been here since forever. And it's a much more matured market. I mean, the economy that we have in gold is way bigger than that in Bitcoin. Of course, the growth of Bitcoin is as much because it's 10 times from what it is right now, because that's the gold market. But gold is here to stay, I personally believe. I don't think gold is going anywhere. People do compare Bitcoin with, gold. But the good part about Bitcoin is, look, gold, you can't carry it anywhere, like what happened in the Ukraine war or the Russia invasion. So you can't carry your gold anywhere. But Bitcoin, it's just one phone and that's it. And that's all you need, or your keys. So that's
Your
all
keys
you
can even
require.
be in here.
Absolutely.
If you're good at memorizing.
Yeah, I mean, if you're not good, I mean, you
just have to remember your key in order.
Yeah. So tell us more about how do you look into the charting, or what are the things that we should, because someone is asking a question that could we understand the reading of charting short term, long term, and the valuation of Bitcoin now and in long term?
So technical analysis, there's an art to it, right? You can learn certain things, but I mean, I've been a technician for a long time, and I know many technicians, and we don't always agree. And our toolbox, the tools that we use, can be very, very different. So we're a very eclectic bunch. So if I say this works for me, it may not work for you. So it's really about finding what are you good at. What I always felt is that the price pattern was the most important. Recognizing what's the pattern and what's the pattern short-term, intermediate, and long-term. Short-term is like 3 to 6 months. Intermediate is a couple of years. Long-term is years if you have that. And I'll use 10, 15, 20, 30 years if it's available. So you want to know where you are in all of these cycles. In Bitcoin's case, you're in a long-term uptrend, and you're going to be in a long-term uptrend as long as you can hold 17,500. You can undercut it briefly, but you got to come right back. As long as you don't break that, you're in a very long uptrend. In the short term, you're in a downtrend, right? So there's nothing good about the chart pattern right now. What you've been doing is that in my opinion, there's a head and shoulders top that was formed. You've been rallying, testing what we call the neckline. And that's around 30,000. And that's why we've been very choppy around 30,000, because there's what we call a lot of resistance. And I suspect we're going to go down, and we're at least going to go down and test 20,000 and possibly lower. But that's what I'm anticipating based on where we are in the charts.
Yeah, and I think a lot of people have been calling for 20,000 as probably the best case scenario, and 12,000 as a worst case scenario. So I've been.
I don't see 12,000 at this point. Doesn't mean it can't go there.
Yep.
I think there's a good shot that we hang out around, let's say, around 20,000, give or take a few thousand. Right. I think we have a shot. I think we have a shot of doing it. But. Right. If the Fed starts tightening too much, if markets wind up imploding, that's not going to be beneficial for any risk asset, including Bitcoin.
Yeah, because if recession sets in, then I think the prices would come down.
Well, prices will bottom before you have a recession. It's possible that we're in a new bull phase by the time we know we're in a recession. Prices are a discount mechanism. Prices will discount 6 months forward. So it's very possible by the time we figure out that we're in a recession, because remember, GDP data is looking backwards. It's very old data, that we're already in a whole new cycle. That's why I love technical analysis. So really what you're looking for the term is called capitulation, where anybody that's a weak holder finally capitulates and sells. And you have this mass rush of selling. What you will see is a volume spike. And what I'm looking for is for volume to spike. Look at all the last times Bitcoin went down. You'll see the volume went up. I'm looking for volume to be at least that high, if not higher. And that will be a very good sign that you're close to creating a bottom. May not be the absolute bottom. It may fluctuate, but you've had the big washout.
Absolutely. And one thing I forgot to ask you, what's your take on IMF? And because I don't think that they are very pro crypto?
Let's put it this way. When crypto first started coming out, I didn't see anybody in any form of a regulatory body or financial institution that was bullish on crypto. They are 10 years behind. 85% of the central banks around the world are actually taking a look at crypto. So it's, to me, irrelevant what they're saying. I think they're trying to slow the pace of it because they know they're so far behind.
Absolutely. And do you think that the banks would start accepting Bitcoin soon?
I would be shocked if they started to accept Bitcoin soon.
Yeah.
That would actually shock me. I'd be pleasantly happy and surprised. I don't think we're there yet. I think the banks, because they're such a heavily regulated industry, at least our president has created a task force to investigate the world of crypto. I don't think any bank here will do anything until there's a report out that's handed to the president. They're not going to take the risk as a regulated entity.
I agree there. They're played safe.
Very safe.
Yeah. So, you've been into the crypto market and you've been into the stock market. So how would you, which market would you prefer after investing into crypto or stock? I know that you...
Oh, you're not going to get me out of the stock market. There's no way you're, I mean, that's where I'm very hard programmed. I'm a stock jock. I grew up, you know, you own stocks, you don't own mutual funds, you don't own ETFs. Now, there's a place for them. Don't go running and selling them if you necessarily own them. This is how I grew up. I'm a stock girl. So my portfolio is 100%, almost, yeah, I don't think I have any ETFs in there. Except I have an ETF for gold because it's hard to own gold. So one of the ways that I do own gold is I do own gold through an ETF. I like collecting dividends. I like compounding. And something, you know, we don't teach finance in schools, but one of the greatest charts you can ever show a person is if you invest 10,000 today and you buy companies that have dividends and you reinvest those dividends, it's called compounding, how your portfolio grows in time. You can, by the time you retire, become a millionaire just from investing $10,000. At least based on historical price patterns. If we are to repeat past cycles, you grow your assets. And of course, you know, past performance is never really 100% predictable in the future. But if we follow the patterns, you definitely want to own equities and you want to compound. You know, the sad part is many people haven't saved for retirement. And I think that's around the world because they're just not educated on how to save, or they have saved and they'll have, in our country, we'll have 401ks and you're allowed to take a loan against your 401k. So you can take money out. Well, that stops the whole compounding because now you've taken, because they're like, oh, you're just taking a loan from yourself. No, you stop that compounding and that growth for retirement. I mean, you don't touch that money ever. I understand it's hard, but if you want to be able to be free to do what you want to do in retirement, you have to start as soon as you start working, putting money away. In fact, I was just having that conversation with my daughter. She just got her first job. And I started, now, Lorraine, you have to take part of your money and you got to start saving it. And I said, Lorraine, you can't touch it ever if you want to have money for retirement. And she understood that. Like, it's important that we educate. If the school's not going to educate, we have to educate our children. Now, she already has an investment portfolio, but I don't want her to think that that's her retirement account. You need to be responsible and save and make sure you never, ever touch it. And the secret is never touching it until you hit retirement.
You know, you're almost, it almost feels like I'm seeing an interview of Robert Kiyosaki. Exactly. how he talks about the education of finance in the school not being taught. I mean, and he is a firm believer of gold, silver, real estate, and Bitcoin.
Yeah, real estate. I mean, why didn't I learn from playing the game Monopoly? You always won if you had the really good properties and you had houses and you got rent. I mean, so we actually had a board game when we were young that was teaching us invest in real estate. I never got that part until I was later in life. But real estate.
I know what you're saying. Yeah.
You know, real estate, but again, you have to know when to buy it. It's not always a good investment. You have to make sure it's a good property. You have to make sure if you want to have rental income that you want to be a landlord and have to deal with everything that comes with being a landlord, right?
So Robert Kiyosaki always says, one thing, don't count the price of an asset. See how many assets you hold. How much would you agree?
I would agree because you want to diversify. Everything that you mentioned, I own. I own real estate. I own equities. I own gold. I own Bitcoin. I own other cryptos.
Yeah.
That's what we mean about diversifying. Having something.
Absolutely.
But never having one asset that if it goes down and went to zero, takes everything away from you. You never want to put all of your assets or a large percentage of your asset in one particular asset, because then you have a lot of risk in the portfolio.
Oh, absolutely. I agree there with what you're saying, because diversification is one of the most important things. And sometimes, people do get into these FOMO of the markets, but I always believe that one should plan and invest with discipline.
Yes, absolutely. And again, I'm not a financial advisor. Please seek out a financial advisor for planning. But these are all the things that I have personally learned through my life and through working on Wall Street.
Oh, absolutely. It's been lovely, learning everything and talking to you. So tell me that if people want to follow you, or is there something they can follow you on Twitter, they can follow you on Facebook, they can follow you on YouTube.
Yeah, I've been a little shy and I haven't really been out there yet, but I'm coming. I'm working on developing a YouTube channel. And yeah, I'm on Facebook, but I'm not sure I'm going to make that my primary go-to. And I'm on Twitter. You can find me on Twitter. I don't tweet a lot, but I am on Twitter. But you'll be seeing in the coming months, you're going to see a lot more of me. Or
do we only catch you on CNBC's or any other channel?
Not yet. I haven't been on in a while. So yeah, I've been coming into the world, building out my own business. I finally decided that I would create a consulting company. And I've been in the process of doing all that paperwork and making sure I dot my I's and cross my T's. And I'm going to start a YouTube channel. I'll be out there.
Nice. So, and tell us about your awards that, you've won on the strategic things about Wall Street.
So I was a technician for 7 years. And on Wall Street, there's a survey by institutional investors of all the analysts on Wall Street. And it's called Institutional Investors All-American Research Team. And I was voted in the top tier 6 years consecutively for technical analysis.
Wow.
So I won that award. I won different internal awards for my reports. I was invited into Marquis Who for all my work on research in Wall Street. And when I was a global portfolio manager, I was invited to be part of Who's Who. So
wow, amazing.
Yeah, I'm out there. If you Google me, you'll find some of the old me, but eventually you'll see some of the new me.
No, we hope to see you much sooner, and
Thank you.
So, and it's been a pleasure having you on the show, and thank you for taking your time out and coming on the show and being with us. Before you go, your final verdict on Bitcoin, long-term price and short-term and mid-term price.
Oh, wow. So I would say, around 20,000 is the downside. So, intermediate, I think it's going to take a while. This is going to be a painful cycle. So I'm not sure you're going to get like a bounce straight back up again. I think we can trade sideways for a long time. I think we're going to wind up being in a range. We could be a range of 20,000 to, let's say 60, well, maybe probably 20 to 50 for a period of time. And then we'll gradually start getting up to 60. And then eventually we'll break 60, but it's possible that takes a couple of years. I know that sounds frustrating, but it could maybe take that long. But longer term, could we go? I mean, there were a lot of projections for Bitcoin to go to 100,000, for Bitcoin to go to 500,000. Well, if you do the math of Bitcoin, and we didn't even talk about the halvings, that there's a limited supply of Bitcoin. There will only be 21 million Bitcoin ever printed. And we have 7 billion people in the world, right?
Absolutely.
So if you just do the numbers, Bitcoin, if you do get full adoption of Bitcoin and the world wants to own Bitcoin, Bitcoin can go up a lot just based on the math.
And your figure would be just...
Oh, longer term? I mean, I have no idea. I do it in increments. Let's get to 100,000 and then let's see where we are in terms of mass adoption. I've seen numbers of 500,000. If you do the math, can you get it there? Yeah, if there's mass adoption, it could go to 500,000. But I'd rather get to 100,000 first.
Right.
But and here's the thing, Bitcoin can go up maybe 10x, but some of the other coins, what we call the old coins, can go up a lot more than that. But you should never invest because of how much it's going to go up or to become just a millionaire. Like, I'm going to make $1 gazillion. No, diversify, have a little bit of this, a little bit of that, grow your portfolio. And if it goes up a lot, that's great. But don't build your life in anticipation that you're going to become a multimillionaire, overnight and you're done.
Yeah.
That may happen to a few people. That doesn't happen to most.
No, and I also think sometimes it's luck and destiny that if you miss that boat or you miss that train, you miss that train. So after that, just to get onto that train, you lose a lot more than you earn actually.
Correct.
So I think diversification is probably the best way out. And what would be your favorite altcoins be?
Well, Ethereum right now is the platform. It's not the most efficient platform, but it has mass adoption. So there's definitely, Ethereum, and that there are a lot of others. I mean, there's so many of them. Avalanche looks interesting. Polkadot looks interesting. I mean, and that's just from a technology, like I'm just not even thinking about TA. I'm just thinking about what's the environment that they're, Solana looks interesting, right? These all have interesting stories, but whether or not they become mass adopted, we don't know yet. We don't know which platform's going to work. And we know that things can go to zero. You can be up one day and zero the next.
I mean, there couldn't be a better example than Luna or USD coin. I mean, had exactly the same thing. Everything was going well and it all seemed like it's a great project. And suddenly, there was a YouTuber, I don't know if you read, he had invested $2.8 million in Luna and it was down $2,000 in fraction of few minutes.
That's insanity.
Yeah. So
you exactly, don't put all your eggs in one basket.
That's exactly what you have been highlighting, that diversify, and don't put everything into one coin and don't look for being a millionaire with one coin. Diversify, get a discipline. I mean, put into gold, of course, we are not financial advisors, but that's what we think and that's what we would always suggest.
Look at all asset classes and try to be in as many asset classes as possible to diversify.
Absolutely, and I do agree with you there. And it's been a pleasure having you on the show. And thank you for being on the show, and thank you for sharing all your information, your knowledge with us. And I can assure you that I don't know about the rest, but it's been a really nice show, and I've loved it.
Oh, I've loved this. This is great. I'd come back anytime. And I hope your viewers enjoy it. So thank you very much. It's been an honor to be here.
No,
you did a fabulous job. Fabulous host.
Thank you, Marianne. And whenever you're out on YouTube, let us know. We'll send the links to everyone, and we'll be the first ones to subscribe you for sure.
Thank you. Thank you so much.
Thank you so much. Take care. Have a great day.
Take care. Bye-bye.
Bye-bye.